So yeah, like I was saying, welcome trading the markets. Basics of the stock market is S&P 500. The money you put in today will be worth more later. And if you look at it over time, since the beginning, it's rigged. It's always going up. Every time it goes down, it's gonna come back up. You just gotta be in there long enough. How long did this last? 2020 to April, a couple of months. You know what I mean? This one, December 2021 to October 2022, a couple months. But look what happened since then. And look, and you already know what's gonna happen. So might as well start putting your money in today, little by little, so that you can afford for it to go down and you can always keep buying. Yeah, you be patient. So that's number one because even what's his name, Warren Buffett, who was the richest man in the world at one point, right? Through stocks, through one stock, Pepsi stock. That's all he had was Pepsi stock, and just from that, he was able to make billions of dollars just from Pepsi stock. Like that. That's it. He put money in that shit, though. But at one point, he was a hedge fund manager, and he challenged. He made a bet. He said, "I bet $1 million that no hedge fund manager can beat the S&P 500 for 1 year." He still got his $1 million. Nobody took it. I don't know if that is. So he bet somebody $1 million to make more money than this, the S&P 500. If you make more money in 1 year than the S&P 500 as a hedge fund manager, he would pay you $1 million. Till this day, he has not paid anybody $1 million because nobody has been able to beat or keep up with the stock market, the S&P 500 as a hedge fund. You find the system. Instead of being one person, a hedge fund manager. But as a trader, as a very good trader, you can beat the market. But it's easier said than done. Like I make more money than the market. Absolutely, because the market is not where the best moves are happening. So if you want to be the best, you can't. But think about it like this, right? If you're trying to be the best, you can't just get mediocre moves. You need to get the best moves. So I can be in a stock that the worst thing is, because this is different from stocks. Options is different from stocks because you get penalized if you're holding it and it doesn't move. With the stock, you can just chill. You can hold it for years. You don't got to move. But with the option, every minute from the moment you enter, you're losing money. There's a clock. There's an hourglass running. So not only do you need to know the direction, you need to know by when, like what time. And that's what makes the option so hard. But you gotta be aware of companies and pay attention to what they do. Yeah, so what you gotta learn is about so once you learn this, you gotta learn the 11 sectors of the stock market. So this website right here, SPR, Standard & Poor's. Let me just Google it real quick. 11 sectors. So once you learn this, you definitely can start to understand where to look. What is the SP? There's a website I'm looking for. They're right here. So this is a chart of like the 11 sectors. So you see as a pie graph right here. But so these are all the sectors right here showing you industrials. I should be able to see how do I click through. So you see the industrial finances. So right here, these are all the 11 sectors. So you got communications. So you got 3 different groups. You got growth. So that's communications, that's technology, and that's consumer discretionary. So that's all your Amazon, your Teslas. Yep. Those are the strong, the mega caps, the big boys, Facebook, the blue chip. These are the people that move the market. So therefore, like in the whole S&P 500, 25% of it is in technology. But yeah, so that's the first group. But this group, it does well when the market is doing well, when the economy is doing well. When the economy starts to struggle, these are the ones that take a hit as well. These big guys, because it's not enough food to keep going at the same rate. So, but on the other end, right? So that's I said consumer discretionary, XLY, XLK technology, and XLC communications. Those are the growth. But on the other end, you got defensives. Defensives are what you got to buy no matter what's happening. Like your consumer discretionary, toilet paper, food, utilities, energy.
Necessities.
So these necessities are called defensive sectors, and they do good when the market does well. So remember, the people who manage like billions of dollars, they don't take their money out the market; they just move it around. So they move it around based off the economy, based off the season and the cycle that they're in. So if you learn to watch the rotations, then you can learn where's money going into and where's money coming out of. But you got to learn all the different places where it could be. So after that, then you got to learn about the defensives. So like I was saying, you got XLU, utilities, because no matter what, you're always going to need utilities. Healthcare, you're always going to need healthcare. And healthcare is like the third biggest sector. And after that, you have consumer discretionary. You're always going to need toilet paper, paper towels, cleaning products. Because I mean, so consumer staples, my fault. So XLP consumer staples, that's what you need. XLY consumer discretionary, that's what you can buy after you pay your bills. The stuff you don't need, the stuff you want. So in other words, the stuff you want is in growth. The stuff you need is in defensives.
Mm-hmm.
So
and that's when they flourish.
So if you're building a portfolio, you want to. The beauty of the market is you can balance each other out because when one does good, the other one does bad. So therefore, when growth does good, defensives tend to do a little worse. But then when growth does worse, defensives tend to do much better. So understand the push and pull between the different categories. So then that leaves the last category after growth, after defensives, is value. So your value stocks are your financials, your industrials, and your materials, I believe. Yep, materials. And I think that's all of them. Yeah, that's everybody. Yeah. So those are the three remaining of the 11. Oh, by the way, real estate I didn't mention is a defensive. Real estate is also defensive. So these defensive sectors, you just see them kind of just they want to just when the market's healthy, they just kind of just float around. But the growth ones are the ones that carry the market, but also they can drag the market down. So understand the different sectors. So now, just because the market's going down doesn't mean I can't be in real estate that's booming. So once you learn to figure out where money is rotating, you can figure out what sectors is going to get the most benefit. And then from there, you do your homework. You go inside the sectors. Who are the sectors lead? Who are the leaders and who are the laggers? That's very very important because just because you bet in the sector doesn't mean you're good. You need to bet on the right horse. Just like perfect example. If I'm betting on the Lakers, I'm trying to bet on LeBron James, not Bronny. I'm sorry, because Bronny's a lagger. Doesn't mean he's not going to be good. But right now,
he's not.
He's not. He's not what. He's not what I need him to be. He's not what I need. He's not what I need. He'll. I believe he'll probably get there, but
unless he has a wide portfolio, maybe. Like I guess if you have a wide portfolio, you could bet on so many different things.
You can set money aside for that, But you want to number one, just protect yourself. Think about the losses first.
I've been thinking about the wins first. I'm gonna go home.
That's what everybody does.
That's what the winners do.
No, like
I'm trying to do what
you. It's like at the same time,
you gotta take that risk though.
You got to take a calculated risk at the same time. You got to make sure, like,
of course, but that's when you open up the portfolio and be like, okay. Like,
so now it's two different things too: investing and trading. So this is long term. I'll say invest in all these long term. You find companies. Definitely go to this website, y'all, and like study this right here and learn about it and learn how much percentage of the S&P 500 does it take out. Like how I said, technology takes up 25%. So it's gonna move it. Then you got financials, then you got healthcare, and then it goes down the list. But so this website right here is where I look at the rotation. So it shows me all the different sectors and which one's leading, which one's weakening, which one's improving, which one's lagging, and then I can kind of make an assessment as to like where is money flowing. So notice I do all this and more before I even get to the charts because I need to develop my edge from to know direction early before I even look at a chart. Because then now all I'm looking for is a chart that supports what I'm looking for. But I don't start off with the charts anymore. I just start off here. And then once I get an idea of the sectors, then I narrow it down and I look inside that sector. which one is leading, which one is lagging, which one is weakening, and which one's improving. So a systematic approach that I take is what I believe in and what keeps me from finding a lot of great winners, not just mediocre moves, like big moves. And to me, it's like if I'm gonna take this much time to go at bat and study my craft, I'm gonna make it count on every swing, and I'm gonna swing for the fences. But I'm also gonna protect myself. Number one, always, always protect yourself. Because it's like it's two ways you can do it though. You know what I mean? So you could be like,
Yeah, there's two ways.
you could be risky where like, all right, let's say the most you want to lose. That's the first question. How much you want to lose? 200.
200.
So say
It's like the casino.
right. So let's say you want to lose 300, right? So now you can either put down 1,000, put a stop loss at 200, or throw the whole 200 and risk it all.
Yeah.
But you see, it's two different ways to do it. But the benefit is like if you put in more money, you can make more, but you also lose more.
Yeah, because you're waiting too long. With a lot of money, you don't wait as long. It's moving fast. You're not gonna be. It's like you at the casino, right? But you're going with 20, but your budget's 200. Like you better start betting 50, 100, so you can get up out of there. You can either start winning or go home. Don't waste your time.
Right. So do tools like this and then seasonal data where I can type in any stock and I can see what is its tendencies the past 10, 15 years. Because the same thing happened every year. And this is like probably an old strategy that nobody pays attention to. That's very effective and has a high win rate. Seasonal. So let's just say I wanna look at industrials, right? Because I was thinking about shorting them, like buying puts on industrials. So that's XLI. So I'm gonna type that in and then
What website is this one?
So this is a report that my mentor puts out for $50 a month called the Rating Report, where he writes out his whole trade idea from beginning to end, weekly, monthly, gives charts, like really goes above and beyond. It has a bunch of tools that you can use as well.
Word.
Yeah. So 15 years of XLI, right? I'm looking at all years and look, I can look at the seasonality up to the day. So this is today, the 14th. So I can even see that it has weakness, right? From the 13th win all the way down to the 17th. Today's the 12th. So tomorrow, guess what I'm looking to buy puts on? Industrials. Seasonality is already telling me that they have weakness coming up into this part of December. And then later on, it should bounce after the 19th, going stronger into January. It's a really
so is it above the line? It's like buying, below the line it's like selling.
No, it's just so notice that this chart doesn't have any price numbers on it. It just shows relative strength and relative weakness. Does that make sense?
Yeah, it's like the RSI.
Yeah, like a RSI, exactly. So you see there's weakness up until the 20th. So I'm looking for put options and see if I can hold them for maybe a day or two and just sell them ASAP before the 20th, before the 17th.
Before they go back up.
Yeah, before they go back up.
So if it goes up, you lose money, you know?
Yeah, because I'm buying put options that make money when it goes down.
Okay.
Yeah, if I buy call options, then I make money if it goes up. So I choose which one to buy. Yeah.
Okay.
All right, but what about the zero line? Like, what's the significance of that?
So that's where relatively weakness becomes strength, you could say, right? Like it just shows how strong it is. Like let's say like right here. So the 30th, so let's say up to the 11th, that's very strong relative weakness. So I guess you would say the 50% on the RSI.
Okay,
Yeah,
I got you.
that's I think the best way to explain it to you would be like the 50%.
Yeah.
So that's where it shows more direct weakness in comparison, to what's underneath the line from the left,
Right. Okay.
Yeah, but so now, right? So like I said, like I will go to this chart. I know industrial showing some weakness. So I will go and I would just look up industrials inside of industrials, who's the weak one and who's the strong one, and find the best person, the best champion for what I want. So in here you see a lot of stocks, but for stuff that I want to short, I want to see it going from leading to weakening. You know what I mean? Like look at Uber coming down fast, But whatever's more outside, because look at how this moves. It doesn't move in a perfect circle, but you see the aim is to rotate. You know what I mean? Some rotations are big, some of them are small, right? But if you look at some of these, the ones that are more outside to the edge, those are stronger, like EFX, that look like a very strong rotation, right? So now I have an idea. I'm like, all right, let me look up EFX and see how does their chart support it, you know? And then I gotta see, do they even have good options? So it is a process. Oh, that's Equifax. So Equifax to me, it's looking kind of strong. Maybe it'll show some weakness, but I think maybe I could find better charts that have stronger weakness. You know what I mean? This is not a clear weakness to me. There's a little weakness, but it's not clear because now it's showing some change of character. Like it might want to try to push up. So I'm not gonna look at that one. You know what I mean? But that's how I go through the process of looking to see, okay, where does everything line up? Seasonalities, rotations, and the charts. You feel me? So, I'm looking at other names, but basically, let's look at Uber. I already have a name in mind, but I'm just gonna look at new names. Uber. Yeah, Uber's look, a lot of weakness. You see Uber? A lot of weakness. You see the difference in the chart? A lot of weakness. So I'm not to say it can't bounce, but I see too much weakness because at one point I was in this trade like all the way over here and I got out and then it just showed nothing but weakness. So for me, I would look for an opportunity to get into Uber. Maybe if it bounces up here, I would buy.
That's a crazy head and shoulders too.
I would begin to sell up here and probably do something like this
But it's also at a liquidity point though too.
where it could bounce.
Yeah.
So I want to see how much does it bounce. But if it shows weakness, I would buy it. If it doesn't show weakness, I'm not gonna buy it. But if it shows weakness, I would try to buy it around here. But we'll see. But I think I have better candidates than Uber because right here, look, this is my short list, right? So silver is one, and I caught a nasty trade on silver where I had gotten in
Just head and shoulders too.
I had caught a trade on silver where I got in this day. So this day on Wednesday, the 4th, right? I got in somewhere around the middle of this candle, and then it went up, then it went down on me. I stayed in the trade. You know why I stayed in the trade, Sid?
Where?
So I got in right there, and you see, like this day came. So like if I was to replay this,
Hold on that hammer candle is when you got in?
so I got in. You see the line, the Wednesday,
The dotted line.
yeah, the dotted line. That's where I got in, right?
Yeah. Oh, okay,
For a
okay.
swing trade, right? For calls for the upside. So then, this is what happened way too fast. But the point is, this day happened, right?
Mm-hmm.
That Friday came and it dropped on me, and I was down. I was down. I don't remember how much I was down, but it was a little scary, I guess, right?
Yeah, yeah.
Yeah, it was a little scary. It was because I'm like, what the hell? You know what I mean?
Mm-hmm.
But because think about it, if I got in, it would make sense to have a stop loss right here, right? But I did it. I had a stop loss down here.
Yeah, I was about to say you'd have it at the previous low, which
Mhm.
it still got close to, honestly.
Yeah, because you see the risk to reward. So I got it, and then guess what happened on Monday? Yep, this Monday right here. I got out, almost doubled.
Oh, you got out at the top. Word.
Yeah, I got out, bro. I almost doubled, and I'm like, what a trade. What a little mini roller coaster. But the thing about it is that I bought contracts. I had what you call it? I had contracts with time on them. Like, let me see if I go back real quick to my history, real quick. Where is it? So December 6th. Is that the first one? One at 39. So this is when I sold them. So I got them at 39. Hmm. Here's the beginning, I believe. Yeah. Okay, so I'm buying shares. So I had two. I bought the first two at 60, right? Then I bought one at 50. So was this the same day? So look, So this is what's cool about swing trading, right? So look, Sid, I bought the first two at 60, right? Then I bought one at 50. Was that three that I had? So far it's three, right? Then I bought one at 39. So I had four. Okay, right? So you see how I bought them cheaper as they went along? So then I sold two at 86, sold one at 88, sold one at 87, and that was a trade. Oh, I was looking at the contracts. So these were 12/20. Okay. So, yeah, that's what I want to know. So on this day, December 4th, I bought 12/20 contracts. I don't know if you still there, Sid.
Yeah, I'm listening.
Yeah, so understand. I bought contracts that had at least 3 weeks, almost a month on them. Well, 2 weeks, 3 weeks on them. 20, well, yeah, 3 weeks on them. You know what I mean? So notice because I bought 3 weeks, this little dip wasn't that bad. I mean, it was kind of bad because they went from 60 to 39. So that's a good, let's see, 60, 40, 20, a good 50% drop. You know what I mean? So
Yeah,
it was a drop. I think I bought it. Honestly, I think I bought it this either above this gray line, to be honest. You know what I mean? I bought it closer to the top because it was breaking these highs. That's why I entered. You feel me? It was breaking these highs, so I entered on the break, and then you see what happened. But just from this and that, from here to there, from wherever I got in, let's say up here to down here, that was a good 50% down on my contracts. I mean, yeah, 50%. Hold on, am I exaggerating the percentage? 60 to 40,
yeah. Yo,
30%,
honestly, that's the only
30%.
thing that will
I
mess
was
me
down a
up
good 30%.
in
I was
this
down
game
30%.
is the
30%.
gaps.
Mm-hmm. Because
Them
this is
gaps are
silver.
crazy.
Silver gaps a lot, but bro, just from this gap to that gap, you can make a lot of money. You know what I mean?
Yeah,
So that's what's dope about it. And what I like about it is that I don't hold it. I just sell it. You feel me?
right, right.
I don't like. I remember when I used to hold these. Son, I don't do that no more because I'd have been tight. But then you see what happened today. You know what I mean? So this is one that I want to see if it can go up for me to think it's gonna go back down. Why? Because if you compare it to the dollar, right? What is the dollar doing? It's breaking out. The reason why I caught this up was because the dollar went down, you know? That's how I caught that gap up. Like I think it was this day. Yeah, this day to that day. Somehow it went down and then I caught that. You know what I mean? But
Yeah,
now that the dollar's pushing up, silver should keep going down. That's what I see. Silver should probably keep going down. But I'm gonna watch it and see if I can get out. But you know what's strange? Gold was going up with the dollar because silver and gold are supposed to go in the same direction. Okay, they finally
nah. Wouldn't
finally
they
came
go
down.
opposite directions?
Because look, yesterday gold went up with the dollar, and the day before, and the day before, and the day before. You see what I'm saying?
Oh, with the dollar you said?
Yeah, gold is on the left, and the dollar's on the right.
Oh yeah, yeah. I thought you
So
said
since
it goes up with silver. I was like, what?
no, so gold and the dollar. I mean, I'm sorry, gold and silver go up together though, for the most part. Like if you look at silver, they're supposed to.
Nah, they're supposed to be opposites. Yeah, they're opposites.
What do you mean? They're the same.
Gold and silver?
Yeah, look at it. You don't see the same? You don't see
No,
the
they
same
don't look.
trend?
No, it's opposite.
At least like how well, maybe I'm going too deep, but if you just look at the last, I'm just gonna focus on the last swing highs and swing lows have been the same, right? You don't see that?
I see what you mean.
Silver just is more dramatic than gold, is how I look at it. But the same way it went up to a peak, silver peaked up back here when gold peaked right here. You know what I mean?
Yeah.
But if you look at it, they're going the same direction. It still went down together. This one popped, but gold kept going for longer. While this is consolidating, gold is popping. You see what I'm saying?
Yeah.
Then consolidation, and then silver's going up, and then silver pops before gold does. That same day, you see they go up together on Monday. They both gap
Yeah.
up. They both gapped up, but then silver consolidated while gold continued to gap up, and then they went down to today. They both went down today. You know what I mean?
I don't know how you trade silver. I could do gold all day. I couldn't do silver.
So silver is dope because the options are so cheap and you can buy in the money.
Yeah, that's the only thing. Yeah.
It's so cheap, but you get paid so well if you're right. You know what I mean? You got to be right though. I'm not gonna lie to you. You got to be right. You know?
I don't even remember the last time I looked at silver.
No, but this one is an easy trade because the dollar's going up. You can't tell me the dollar's not going to go up.
No, it's definitely bullish.
So guess who's bearish? Silver.
Yeah, for sure.
hmm So that's how you trade silver. So number one on my list for puts is silver. So what would I do? Go to SLV.
Gold goes against the dollar also, doesn't it?
Absolutely. Because they both move
Right.
together. Remember I said gold and silver move together?
Yeah. So it goes against the dollar. Yeah.
hmm So right here, December 20th, the 28.5, buy in the money. When you trade silver, it's so cheap. Buy in the money. Don't be cheap. You can still work out, yeah, but if it starts going against you, that drawdown is gonna eat you up. You know what I
Eat
mean?
you up. Yeah.
So you want to buy these for 63 bucks per contract, right? And I'm gonna also buy it on Robinhood. It's probably easier. But first I want to put it on the charts. That's what I like about Thinkorswim. I could put the silver option on the chart itself, so I can see that exact option, like where has it been, and then just from looking at this, you can see like this thing was 26 bucks. And then you see it gapped up today to 45, went from 45 all the way to 70, and then it came down to 56, and now it's at 65. So for me, a great price pickup would be like 56 based off the structure. So I'll create an alert to see if it ever goes down to 55. Another thing I could do is go on Robinhood and put in an order at 55 to get one. Matter of fact, I'll just do it right now because I do want to get one, but I want to get it for a discount. You know what I mean? So a good way for you to not even have to look at it would be to lowball it. You know what I mean? So trade silver. And mind you, I know the low of day, but the low of day was 45. So I can also think about getting it for maybe 45 as well. But 50 might be a higher percentage for me to get hit. 55 might be better. So maybe I should look at 50 or 45 as a better price. But you see, I'm looking at the past to try to like get a discount. So I go to silver, go to December 20th. That's 8 days away. So this is kind of a quick trade. I wouldn't hold this for more than a day, if that. I might just sell it right away. It's better to just sell it right away. But look at it like this, right? If this moves 50 cents, this goes from 64 to 98, and that's a good, what is that, for $44 per contract. That's pretty good. That's pretty good. You pay 64 and you get $44. That would be really good because you could just buy 10 of these, and make like 444. But I just want to try to get one, but I want to see if I can get one for 50. I want to lowball them. I want to say 45, but I'll just say 50 for now. So now I just put in an order to buy one contract at 50 even though it's going for 64. Because if I buy it at 50, I'm gonna definitely sell it at 64. I'm not greedy because it's all about how many contracts you have at that point. But I know that these can go to 70, you know what I mean? Or if I go down further, go to like the daily, these can go to 80, 90. At one point, it was 145. I don't think we're gonna go back all the way back there, but I don't even need it to do all that. If it just goes up to here, 80, I'm out. And that's just how you gotta play the game. That's when I'll probably buy it again if it dips and then maybe hold some. But the first time I'm taking my money, and the second time I might hold it. That's how I strategize it. But yeah, what else? Oh yeah, so let's go back to that list. Then you have Delta. This was a great trade. Um, you see, we're short in Delta because Delta is an industrial, and if you look at industrials, matter of fact, let me put it on this side. Check this out, Sid. You beep? Uh, Yeah, yeah, yeah. This is about to drop. This is about to drop. What? Yeah, this is fire.
Which one?
So you can play Delta, but first of all, industrials are about to drop, and Delta is an industrial stock. So one
You
that
don't
has
think it'll retrace before dropping though?
what'd you say?
You don't think it'll retrace before dropping?
I yo, this level has to hold. It's already breaking. Maybe it'll bounce, but I think that the weakness is just getting weaker. The fact that we just took out this low, if we can retrace, I think that'll just be a bigger point to retest this line and go down. But we'll see. That's what I think. Exxon, XOM, oil has been getting punished.
Mm.
And Exxon, does it follow crude? Let me see. Crude oil futures I'd be looking at. They gotta bounce, but hmm. I think their time will come,
Yeah,
but
but I mean, gas and oil, wouldn't they go opposite of each other? They're competitors, technically.
well, it's crude oil, so it's the same thing that makes gas, but they don't move exactly the same though. They really don't. The better one to
Like,
look at is XLE, and XLE don't look no bueno. You feel me? XLE is the ETF of the energy sector in which Exxon is part of. So if
mhm.
XLE is gonna keep falling, and the thing about these sectors, they can keep going. The chart is crazy, right? Like these things just keep going, bro. Like you would have thought I was gonna retrace, right?
It tests that medium price right there.
But I feel like these be looking like forex charts because stocks are supposed to take a break.
I
So I
like it
think,
when they just keep going, man. It's
bro,
better.
I'm telling you, this looks like it's about to keep going. I don't know, but at least down here, at least down here, at least down
I
here,
think it'll create another shoulder.
at least I think it'll at least
So that way, like around this zone would be
it'll
looking for
come
like a
back up and
neckline.
retest the blue line top.
Like it might go a little lower to create a neckline, but I think it'll create another shoulder to keep tanking.
Yeah, so these
There's
are
too much liquidity on the downside.
a lot. A lot, a lot. Yeah, a lot. Yeah, a lot, right?
Yeah,
So
there's too much liquidity.
so so
And
so
especially after, hold on, squeeze that other chart out.
Exxon,
No,
the
the
other one, this
energy.
one.
Yeah, you see, like it never
Just keeps
broke
going
no.
right. It
Yeah,
keeps
it never
going.
broke no lows. It never broke no lows. It never broke no highs.
That's crazy, right?
Yeah, nah, that shit about to tank, bro.
Holy. I'm sorry, Exxon's about to tank too. I most likely, I believe. Like I even have, you know, my stock rig, the one that I have shares in. I'm about to sell my shares
Mhm.
because I don't think it's gonna hold. I don't think it's gonna hold. It's been on a downtrend forever. Every time it pops, what does it do? It drop. You know what I mean?
Oh, you bought shares at what price?
At $4.25. So I'm thinking about. I think it's gonna tank, which is why I'm thinking about
I
selling my
would still
shares,
hold. I would still hold though, no cap.
even if it tanks.
The only reason why I wouldn't hold,
Hmm.
well, nah, I would hold because it looked like it's creating a triple bottom, so that could be a strong bullish momentum.
If it can hold, but
I
now.
think it will
Mhm.
because hold on, squeeze the map. You know, I got to see more data. Keep going, keep going. Is it as far as it can go? Okay, boom. You see, look at this, right? It
Mhm.
hasn't even took out liquidity from those double bottoms on the far left. The double
Right
bottom.
here.
Yeah. So
Hmm.
I don't think it's gonna come down to that point.
That's deep.
I think it's just gonna test where it's at because that's the medium price. The middle of the W. You see it on the
Right
left
here.
where the double bottom is.
So yeah.
The
So
middle. You see where the middle is? Where that line where you have that line?
yeah.
You see how the market right now is currently at that?
Hmm.
You see what I'm saying?
Hmm.
I think that it might just reject it, but it's trying to get a lot of people out because the break of that is where a lot of liquidity is. Where that first pull up to pull back and then that shoot up, you see that right no, no further to your right.